Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a 4-day rally, the Australian dollar seems to find a little bit of backstep as it approaches the 71-cent handle, with the hesitation in mind due to the fact that there was and still appears to be above 71 cents good supply may return if we see a break above there. Nevertheless, the pullback may find support around the lower side of 69.5 to about 69 cents if we see it. Technically, though, there is still a little bit more left in the upside, but as I mentioned, there could be a bull trap above 71 cents. Let's see if we find, and most probably, a rejection and supply back towards the bottom side of the range. Meanwhile, the US inflation data via the PCE came in firm at 2.8% and 3% core, that is, year on year, with both at 0.4%, reinforcing sticky inflation, highlighting persistent price pressures, but markets largely ignored, it appears, that viewing the numbers as outdated and relatively to the latest energy-driven developments. Still, later today, we've got the US CPI, where a strong inflation print could reignite tightening expectations and push the market lower. But while a softer outcome may allow a little bit more to an extension to the top side, but above 78, as I mentioned, well, let's see if it's challenging and we do get a rejection, as I feel there may be. Nevertheless, the market is still poised for a slight test up, but all eyes on the CPI data. Turning to the euro, well, the market still seems to be holding steady but tilted lower as a fragile US-Iran ceasefire dynamics underpin the US dollar, while persistent Middle East tension and firmer oil prices have reinforced inflation concerns, but a hawkish Fed backdrop, and now markets are a little bit cautious with the US CPI data, with expected 3.3 year on year, where a softer outcome could pressure the US dollar. But a hawkish CBA backdrop with markets pricing in multiple hikes should help limit losses. But still, I feel there'll be any pullback, bargain hunters lurking. So let's see where 115.5 may come into play if we do see that pullback. But the top side, as I mentioned, still holds and likely to be capped around 117.80. After a very savage sell-off, dollar yen is finding a little bit of profit taking, or more to the point, a little bit cautious of being short. Nevertheless, towards 160, the bull trap is likely to be played again. There is some talk that we've got a shoulder, head and shoulder, and still maybe finding the neckline that's holding dollar yen up at the moment. That is around 158. But overall, if this is the case, then the measured move, if I draw it in, if we do see a break of this level of 158.45, then the measured move is down to here, which is around 156, which is where my target is anyway, because I feel the market is still very much above 160, not a place to hold longs, and therefore supply and a break of 158.45 could see this move to the downside. The technicals are still heavy. I'm still bearish. Let's see how it unfolds. Sterling, well, the market is still very hesitant towards this top side around 134.5. And as you can see, at present, a little bit lackluster. Technicals, well, the MACD isn't fully supportive to a move up, so we could get a pullback towards 133 region. Finishing off equities, I'm neutral on oil and gold due to the fact that the market is still whipsawed and uncertain. So I still want to sit out for the moment. Turning to oil, well, the market is still very much heavy since that pullback for 3 days and now looking for direction. But as I say, I'd rather sit out at the moment due to too much heat coming from the Middle East tension. Well, that's a wrap. Thank you for joining me, and as always, look after the intraday report, and I hope you enjoy the great start to the new weekend.